What's the current state of gold investment? And how is the US dollar trending? If these questions have been on your mind, you're in just the right place. Welcome, and let's delve into these pressing matters. The US dollar is showing signs of fatigue. Although inflation is once again on the rise, it's limited. Over the next year, the Consumer Price Index (CPI) may not fall back to 2%, but it's unlikely to rise above 5%. The Middle East is in crisis. War may escalate, but the oil price is unlikely to rise above $100. Winter, the peak oil consumption period, has just passed, and market demand isn't that high. Instead, safe haven assets like gold are gaining popularity. Bitcoin has fallen from its peak of $70,000 last year to its current level. Investors are shifting their focus. Many believe that gold is a good choice because the petrodollar has deteriorated. The biggest buyer of oil is no longer the United States, and the OPEC Plus policy is not controlled by the US. Russia, China, and other southern countries, including those in the Middle East, are very keen to get rid of the dollar. In the short term, the status of the US dollar is hard to shake. However, countries are beginning to favor gold more. China is constantly buying gold, and on the other hand, it's selling US Treasury bonds and the US dollar. From a technical perspective, gold broke through the August 2020 high point of 2,200 points. It should be able to rise at least another 800 points to reach a high of 3,000 points. There's a chance it could reach this by the end of this year, but it's important to ensure that it doesn't fall below 2,300 points in the meantime. The recently released U.S. Consumer Price Index, CPI, has fallen back to between 3.1 and 3.4. Even if the situation in the Middle East becomes more tense, unless oil prices rise above $100, the CPI will still fall back to 3 or slightly below 3. The Federal Reserve is unlikely to start cutting interest rates mid-year in this case. Maintaining an interest rate of 5% would be disastrous for the US government and the entire business community, as well as individuals. Cutting interest rates 2 to 3 times by the end of this year would bring the interest rate down to 4%. Ultimately, next year, the interest rate will fall back to 2%. To summarize, the US dollar's trend is tiring and gold investment is on the rise. The shift in investor interest from Bitcoin to gold is evident. Despite the potential escalation in the Middle East, the oil price is unlikely to rise significantly. The expected decrease in interest rates could also contribute to a rise in gold prices. Keep an eye on these trends as they could significantly impact your investment decisions.